Alright, good afternoon everyone. Today is Monday, December 10th, 2012. Let's start right off with the results of the live trading room, okay? It was pretty much sideways action this morning. We were looking around, trying to find the right spot to enter, and unfortunately we got a couple of them, and we just didn't have opportunity on a couple of them. And I'm going to go through it all here in just a minute. I just wanted to bring up soybeans to see where they were based on our last entry there. Alright, so our results for the morning. Gold, we had lost a couple of ticks, 2 ticks. Crude, we were plus 10 ticks. NQ, we were minus 2 ticks. And the soybeans were minus 8 ticks. So we were down like $30 on the day, something like that. Let's see, they even out. That's minus 10. Yeah, down 30 on the day, $30 per contract. Now, if we would have traded right through the break, we would have been long the soybeans again. Let me just start right out with the soybeans, okay? I didn't take any ES trades. I didn't take any YM trades this morning. We took gold, crude, the NASDAQ, and the soybeans. That's what we traded this morning. All right. Let me show you what happened here on the soybeans in the pre-market for the soybeans, because the soybean market didn't open up until right over here, okay? I was watching this happen. This one right here, I don't remember. Did I put the trend line? I put that trend line on there after it had happened because I wasn't looking right at it because it was pre-market and I kept saying I'm not going to trade till the market opens. But you can see right here we drew this trend line up. We had a little bit of bearish divergence here. Now this is a pretty good opportunity I think to show how the trades actually work. When the MA1 crosses below the BBC, the MA1 is this blue and red line, and it crosses below the BBC, which is the green line right here. You anticipate that the market is changing to a downward direction, okay? The direction change is happening here. What you want to see is price pull away from the BBC, which is the green line, and there to be some sort of divergence down here on the slingshot, all right? Divergence means the green line down here moves away from the cycle portion down here, okay? That's what that means. So we got that bearish cross, and what we look for is a pullback up to test the BBC, all right, when you still have that divergence. If you get the test of the BBC with the divergence, then you can just take the down close. Unfortunately, that didn't happen. So when that doesn't happen, when it doesn't pull back to the BBC because there's so much momentum, what you then look for is a close below this trend line. Now, I've taught how to draw these trend lines several times, and I will do it over and over and over again for anyone who is a partner. If you sit in our live trading room in the morning, you will see me drawing these trend lines over and over and over, even on a slow day like today. The place to enter that would have been the close down below the trend line, which would have been right here. Okay, every single one of the trades that I put on has an 8-tick stop on it. That one right there would have moved nicely. The next opportunity was right in here. When it came back up here and hit the BBC and gave a down close right there, that gravestone doji. A gravestone doji, by the way, is when a bar's open and close are at the low of the bar. Okay, this is a gravestone doji, and it's in context, suggesting bearish action afterward. Anyway, when you get the gravestone doji right there at the BBC, the cycle down here is moving up a little bit, so you don't have the kind of divergence you want to have. You want to have the cycle being red like this. So what to look for then, the more conservative entry, would be a close down below that trend line. All right, right there, I've already spotted it. Again, right here, same thing. The divergence just isn't there. Over here, same thing again, the divergence just isn't there. The close down below the trend line would have been right there. Okay, and then the market opened up. It got sideways in here a little bit. There was an entry in here that I missed. Right there. That I missed on the way up. I took this one right here because it had so much momentum, and then it stopped me out just about to the tick. That was my minus 8 ticks on the soybeans. I jumped in again over here, and I ended up taking a break even. It went up to this trend line that I drew, and it bounced right back down, took me out at break even. Eventually, and it took a long time, eventually it closed back up above there. You can see what it did here. The soybeans just moved up and continued to trend the way that they normally do. Now there's a big grain. Yes, Frank, I will. There's a big grain report tomorrow morning. So if you're a bean trader, be aware of that. All right, 7:30 Central, 8:30 Eastern time. There's a grain report that comes out, so you want to be careful you don't get stuck in a limit up or limit down position. Okay. Furthermore, this week, Dwayne, I think, mentioned it already, but it's rollover week this week. Thursday, the new contract becomes available. Friday, we'll be trading it, probably, depending on the volume. That's what we're looking at. That's all the CME products, okay? CME products. That would be the 6E, the YM, the NQ, and the ES. All right. Let's see, right here, and the Russell. Can't forget the Russell, even though that's not a 6E product. That rolls as well. The 6E, I think, actually rolls on Monday, but we'll still probably move that one over. All right, so over here, you would have been looking to get long on the up close above this trend line. If you stayed in this, great, good on you. If you didn't, then you could have gotten long right in here on this up close for the continuation. Right here is the trend line, though. It's not this black trend line that I drew there. It's this one right here. All right. And there was another little one right over here that you could have jumped in on, right there. Okay. And just recently there was another one over here. It's actually got some bearish divergence now, but the MA1 is above the BBC. You see this right here is bearish divergence. When the green line is moving away from the cycle like this, and the cycle is red and headed down, that is bearish divergence. It's still bearish divergence even right now. Okay? That's still bearish divergence. But the MA1 is above the BBC, so we're not going short over here. We're not thinking short just yet. Right? It's just consolidating, and it looks like the cycle is going to reset here after this move up. That's what it looks like. All right. All right. That is the soybeans. Now, I didn't take any trades on the ES, but I do have a request to go over some ES trades that were available this morning. Now, granted, there was a weekly trading zone right in our way most of the morning. It was right below us most of the morning. Okay, let me just slide this over. 16, 17. Okay, it was right below us most of the morning. I'll put it on here, and I don't trade going into weekly trading zones, but if you do, then with everything that I just said on the 4-tick range, it's the same setup on all the 4-tick range charts. You look for your bullish cross, you pull back to the BBC. If you have bullish divergence, you can take the up close. If you don't have the bullish divergence and it's still trending upward, then you can take the close above these trend lines. In this case right here, we had some bullish divergence. The cycle was red and headed down, but we got to close above the trend line at the same time anyway. So if you didn't mind trading into the weekly trading zone there, then you could have gotten in right there, and again right here, the same thing. But down here you see the divergence was gone. So here you're not taking this right here. You're taking this close above. Okay. Over here it tested the BBC and there's no divergence whatsoever in here. So again, it's the close above the trend line. It's not the bounce off the BBC. It's close above the trend line. Same thing on this one right here. There's a little tiny bit of divergence, but this I don't really consider, when the cycle's in the middle going sideways, I don't really consider that a good spot to trade. It usually gets pretty choppy, like it did in fact do here. But you could have gotten long right there, and right there. All pretty much the same spot. Actually, all exactly the same spot. Each one gave a half a point to a point, and finally it ended up moving up. Okay, that's what we had on the ES 4-tick range this morning. Okay, I didn't take any trades there because I thought it was just too choppy. Right? The same thing here on the ES 10,000 contract. Pull down to the BBC right here, but it's going right into the weekly trading zone, so we didn't do anything. Then we got stuck in a sideways range there for a while. Moved out of it by about a point, then got stuck right back in another sideways range. Okay, I didn't even look at the YM because the ES was such a mess. I didn't even look at it. Let's see, I did the ES, the soybeans. Let's jump over here to the NQ really quick. All right, I did take a few trades on the NQ this morning. Couple. Yeah, few. There we go. I took a few trades on the NQ. I slipped a tick on this one. My break even slipped a tick on this one. I took the short off the BBC. You see, again, this is a 4-tick range chart. So price came up, tested the BBC after the cross. There was a spot to enter right over here that I missed, and there was another one right here that I took. All right, I took this short right here, and once we closed down below the MA1, over here I had moved my stop to break even, expecting this move down, and it came back up and stopped me out at break even. It actually slipped me one tick. it moved up here. I missed this opportunity on the long side here, this opportunity on the long side in here, and again this opportunity on the long side here and here and here. I missed all of that. But if you were focused on a single market, then all of that was tradable. You know, say you got to break even with me here. You should have gotten profit on this one. You know, 6-8 ticks profit on that one. Break even here. Another 6-8 ticks. Another 6-8 ticks. Another 6 or 8. Another 6 or 8. Another possibly break even over here. You could have even stopped out on that. -8. But that was all in the first half an hour. Okay. Then everything got sideways into here. And you probably want to know in this sideways action were there any opportunities. Well, let's just take a look. We had a bearish cross, tested the BBC with a down close right here with bearish divergence. You could have shorted right there. That, depending on what your stop is, that might have stopped you out. All right. Over here, you could have shorted on the down close right there, gotten the 6-8 ticks back that you just got on the stop out. Bullish cross, tested the BBC, bullish divergence, up close right there. Another 6-8 possible right there on the long side. Nothing there on the short side. Here again, bullish divergence. In this one right here, let's see, by the time you got the up close, the cycle was a little red. You might not have taken this right here. You might have been waiting for the trend line. Okay, with the up close right there for another 6-8. All right, over here, definitely waiting for the trend line, and it never happened. Over here, you had bearish divergence, but it went through the BBC. So you would have been waiting for the down close below the trend line, which would have been right over here. I'll draw the trend line for you. Okay, there's the trend line. So here's where the down close would have been. All right, over here, same thing. You know, you could have just sold off the YBR right there, but even just coming off the YBR, it may have given you a little more confidence in the trade. But there's the trend line on that one. All right, and then we got in here. I took a trade here, got a break even, or I slipped one tick. That put me at -2, and I got a trade in here. And I was actually green on the day right here for a few minutes, but it came back out and got me out of break even. You can see there was another one here, another one here, another one here, and that was it. If you were trading just a single market this morning, there was plenty of opportunity. Okay, let's just look at the soybeans again really quick here. Because I'm doing more than just a recap right now. All right, so right in there was another opportunity on the soybeans. All right, that up close right there, that up close right there. Both tradable opportunities there on the soybeans. All right, let's jump in the gold here really quick. Okay, here we have right here. Pull back up, tested the BBC with a down close on the gold. All right, then we took some profit there. We gave it back right over here, but we missed all these other spots in here, all these trend lines that I drew. We missed those. I got long again right here, and I took one tick profit on that one, and I missed every other opportunity since then. All right, but there definitely was opportunity here on the gold today. All right, right in here, we had the down close off the BBC with the bearish divergence. That is right there. You know, that right there, that first trade right there is a day maker, but I missed it. And when I say I missed it, I don't mean I didn't take it because, you know, some psychological reason that I had. I honestly missed it. You know, I was doing a lot of things first thing in the morning like that. Let's see, crude oil. Crude was pretty choppy today too, but it did have a couple of opportunities, and I took a couple of them. Let's see in here. I think that was a little more like that. All right, here we go on the crude oil. We opened up over here. We had bearish divergence right up here, pulled up, tested the BBC, gave a down close. I took some profit on that when I shorted below the trend line over here. Okay, I had drawn the trend line in. The better place to short it would have been right up here. I missed that, so I waited for the more conservative right over here below the trend line, and I got into that one. I took some profit on that. It continued down well beyond where I took profit, but then it got very choppy in there, and I didn't trade anything. Okay, came over here, and there were some opportunities on the long side that I just didn't see. You know, you can tell I didn't see them because I didn't even draw any trend lines. But right in here on the long side, All right, right there and right there. Over here, it looks like I took a long trade over here that I took a small loss on. And then right toward the end of the morning session, I took a short trade over here that I took profit on. That's what got me to plus 10 ticks on the morning. You can see I missed a couple of opportunities in here on the crude oil. But we're using, again, it's a 4-tick range chart, and we're using the same exact indicator set and trade setup across all these charts. All right. Let's see, that was gold, crude, the NASDAQ, the soybeans, the ES. I didn't do the YM because I didn't take any trades there. I'll show the Russell because a lot of people like the Russell. And I'll show the YM too, for that matter. What time is it? 12:39. Okay, I'll be quick about it though. On the Russell, I didn't point out too much on the Russell this morning because it was as choppy as the ES. Right in here, I remember saying that there was a possible long trade on an up close above this trend line. We didn't get the up close above that trend line, and it just chopped around all through there. Yeah, there wasn't anything here on the Russell. I'm glad I didn't take any trades over there. Let's see. You can draw a trend line down there like that. So the up close right in here would have been a spot. And that would have been a spot for two reasons. There was bullish divergence. Hold on. There was bullish divergence right there. It tested the BBC with an up close, and it was also an up close above that trend line. Okay, over here I had drawn in a trend line. I didn't take any trade in here, but there was the up close right there at the high of the day. And since then, we've had a bearish cross, bearish divergence. Just recently, right there, was the down close. All right, and that was the Russell. And let's see, I think that pretty much covers it. I'll look at the YM quickly. On the 500 contract YM this morning, there was never a pullback all the way to the BBC from the open, okay, until all the way up here. Right here, there was a pullback to the BBC, and it closed the window of opportunity pretty quickly right there. It didn't put in a higher swing. So there was the one trade available right there on the 500 contract in the morning session. Okay, if you look at the 4-tick range, you know, the YM, you can see it right here. It was just as choppy as the ES. That's why I didn't even bother looking at it. But let's see, 9:30, right in here. You know, you can draw a whole bunch of trend lines here with little moves. Little moves up. A close above right there would have been one. A close above right there would have been one. Let's see. A close above right there. Now these were all little tiny moves that the YM had this morning. I wasn't interested in trading it at all this morning. Okay. And that, I think, is going to wrap it up. If you have not taken a free trial with us, go to www.cfrn.net/apply. Sign up for our free trial. In our free trial, you get 5 business days in our live trading room. You get access to all the charts and indicators that you see in front of you. You get access to Dwayne and I, and pretty much the whole thing. You get everything but the partners meetings. All right. Yeah, so www.cfrn.net/apply will get you right in there. All right, with that, I'm going to stop the recording.